TCS reported numbers, and that's the focus here. N. Chandrasekaran is CEO with Tata Consultancy Services, and he, as always, is with us to take some questions. Chandra, good morning. Great to have you with us here. Thanks very much for your time.
Thank you, Prashant.
So third quarter, how would you characterize? Because I mean, the general narrative that I'm hearing all around is, well, numbers are in line, but expectations were muted. How would you see
I think it's a very good quarter in my opinion, because third quarter is a seasonally weak quarter, and you expect holidays, you expect furloughs. On that, if you really see, we've delivered a 2.5% CC growth, which is better than the Q3 of last year. And more importantly, you see the profile of the growth. To me, the positives are the client metrics has been really spectacular. I think we've added 21 new clients in the 1 million band, because those are all clients that will move up. 20 clients in the 5 million bracket, and 6 clients in the 20 million bracket. So I think if you see whether it's a 50 million, 100 million, every client bracket has seen a significant client addition. The second thing is that it has been very secular, broad-based growth. We've done well in Europe, 6.6% CC, well in North America, 2.2% CC. Latin America, which was a headwind in Q2, which caused a shortfall, picked up and then grew about 10%. I think India has done again a positive growth. All sectors, retail we said will be muted because of the holiday season. Yes, it was muted, it grew about 1%, but every other sector has broadly in line. And energy sector is a headwind and diligent is a headwind. Apart from that, I think everything that we saw is pretty positive.
For our viewers, when Chandra says CC, it means constant currency. So that's just explaining that. But how big is impact is energy? I mean, the collapse in the price of oil and other commodities. I mean, directly, I guess energy vertical is not very large.
It's not very large for us. Yes. It's a 4.2% of our revenues.
Yes.
So it's not a very large portion of our revenues, but still we've got to see what the headwind is going to be.
4.7% is a percentage.
4.2%.
4.2% is a percentage of overall revenues. But it's about what it indicates, right? I mean, beyond a certain level, it does indicate slowdown in demand. Do you buy into that, and how will that change things?
I have been very, very careful all along not to extrapolate the macros into my business.
Right.
I observe the macros. Right. I be cautious about the macros. But then I kind of worry about what my clients are telling me.
Right.
So I don't see that.
Right. I mean, your clients aren't reflecting any of that worry which is being written about, right? That demand is slowing or any of that sort.
Not at all. Not at all.
Nothing. Okay. Volume growth in the third quarter, that was a tad disappointing.
You see, you can start looking at this parameter or that parameter. But fundamentally, volumes are always down in Q3 because of the nature of contracts we have. Right. We have got fixed price contracts, monthly contracts, and T&M contracts, and maybe a few other types. And the volume is always a factor of how many working days you have, and how many days were furloughs, and which client, etc. So you always have to look at volumes and pricing together, and we've been saying it for quite some time.
So if you break down volume and pricing this quarter, I mean, how does it?
So I think it's a 2.3% pricing growth,
right,
and 40 bips volume growth, 40 bips currency related growth, and 20 bips due to offshore drop.
So you're saying volumes aren't a worry?
No, it's not. No.
I mean, the net result is what
counts.
Is what counts. But volumes at the day are the fundamental point, right? I mean, the volume.
Yeah, but the reason volumes look low is because I've explained the reason. Right. It's not, if you really account for how many days you have lost.
Right. That explains all of it.
All of it.
All of it.
So, which is okay. So once the number of working days come back in,
right,
in a quarter, then volumes will go up.
Right.
So it's not. See, the point I'm making is that it is not ramp downs.
Okay.
If you're losing volumes because of ramp downs.
That's not the case.
That's not the case.
It's basically lesser number of working, primarily lesser number of working days.
So if you're having ramp downs, that's a worry. It's not a ramp down. That's the point.
Okay. So the two things which you mentioned, one is energy, which we briefly touched upon. The other is diligenta, right? I mean, where there is still slower sort of ramp up, slower growth. Can you explain what's happening there now?
No, Diligenta is a degrowth on a sequential basis because Diligenta business is a business which is slightly different from the rest of the business. We win one large contract and then we go through a transformation, ramp ups, and then as the policies begin to run off, the volumes come down. And so we've got to be doing these large deals every now and then. And currently we don't have a visibility of closure in the next quarter or so. So given that we expect the degrowth to continue for the next few quarters. So that's a headwind that we had to overcome.
Okay, so
both from a UK perspective and the insurance perspective.
Right, right. Europe has done pretty well. And how would you sort of contrast that off with what's happening in US? I mean, because again, going back to macros, it's US which seems to be, the only one large economy which is doing
US
very
has
well.
done very well as well.
Yes.
2.2% CC is not a bad number for Q3. So for us, I think we are bullish about US and Europe. So we are not. We are also taking into account the fact that US is much larger compared to Europe.
Sure. The base is much larger.
Much larger.
But which kind of clients are you seeing the most optimism from as far as US goes, and the same about Europe?
I think in US we see a lot more opportunities in the digital area, and in Europe less so.
Okay.
And then, but I can't even say that because customers belonging to certain segments like retail, even in Europe, are investing in digital transformation.
Okay.
But you will see more simplification deals in Europe. In US, you will see a combination of simplification and digital reimagination.
So in terms of the type of work that you're sort of getting offered in both these markets, US of course has been advanced, more advanced, and that remains true as well.
And also the economy is doing well.
Is doing very well. Financial services in the US, how is that holding up, and what's the future looking like?
I think it looks good. It looks good. I think we should do well in the financial services in the US and in Europe. BFS in particular. Insurance, as I said, we need to see momentum. Currently, it's muted.
Right. All these regulatory sort of headwinds which large global US-based banks were facing, huge, humongous fines. All that is largely behind, you'd say?
No, but I think this is whether it is in the US or Europe, the financial services industry is still spending a lot of money on regulatory changes and risk management, and that will require them to be investing in those areas from a discretionary spend point of view, and also they are getting squeezed.
Right.
So definitely there will be more optimization and efficiency initiatives from the financial service industry, which we will work with them.
Okay.
That's an opportunity.
Okay. Overall margins for TCS, I keep hearing this from analysts that margins maybe are at a peak. There's little room to expand them now. How would you respond to that? I think we discussed this last time.
We have calibrated that we want to keep it between 26 to 28.
Right.
And we are bang in the middle. Because the excess ones we are continuing to invest. Whether it is Japan, whether it is France, whether it is a digital space, cloud architecture, automation tools, platforms, so many areas in which we are investing.
Need investment.
It's better to invest because we are very, very confident about the future. So given that, we need to be investing.
Right. So that's the band. That's a conscious decision not to try and push that.
Push that, yeah.
Okay. What is the outlook for 2015 looking like? I remember as we were wrapping 2013 out, actually the fiscal year out, the financial year out, you were saying that 14 is going to be a lot better than financial year 13. That tone has moderated quite a bit from there. Things have changed. You've sort of been communicating regularly.
We just have one more quarter left.
Yes.
As
we finish the calendar, we are in the new year. So I'm sure that you...
See, we have said that, we originally had said that FY15 will be greater than FY14. We said that's not going to happen, primarily because of the miss that we had in Q2. But otherwise, I think we've done well this year. Still, we are delivering the best growth in the industry. And we will continue to leverage all the things that we are doing well and the great momentum we see to to exit this fiscal year well, so that we are well prepared for FY16.
Will 16 be better than 15?
I'm not going to say that. I'm going to be very careful not to give one-liners. No.
Let me try and get one headline out of you.
The headline is Chandra refuses to give one-liners.
That's not a headline. Thanks very much. Great
Thank you,
talking to
Prashant.
you. Good luck. Appreciate it. Thank you.